Are you ready to take control of your business finances? Let's dive in to the 3 must-know financial statements that will empower you to make better financial decisions and drive your business towards success. And by the way, my name is Jessica Lawrence, and I help entrepreneurs take control of their bookkeeping and their finances. Look, knowing these financial statements is really going to be so important for your business for 3 main reasons. The first is it's a legal requirement. So if you have a small business or a large business for that matter, you need to have your financial statements. You need to report the finances of your business. It is a legal requirement. Okay, number 2, and that's for tax purposes. So when it does come time to file taxes at the end of the year, you really need to have these financial statements in order to be able to file your taxes and really take advantage of as many tax deductions as you possibly can. And when you've got those financial statements, this is so much easier to do. You save so much more on taxes, and it just benefits you and your business so much more in the long run. Now, the third reason that this is so important is really for your business and financial management. So when it comes to making decisions for your business, you need to know your numbers to be able to pretty much make better strategic decisions. So for example, if you're trying to decide whether or not to hire a new employee, right? You need to know what your numbers are to say, okay, do I have enough of a buffer in my income every single month to be able to justify that new employee? How much do I think that the employee would then contribute to that top line, right? We need to have this information up front to help us make those better decisions. In my short-term rental business, when I need to do an improvement to the house, how much have I made over the past couple months? Do I have enough of a buffer to be able to invest in a new AC, to invest in new furniture, right? The only way to be able to make really informed decisions is to know what your numbers look like. But this is also important because it'll help you increase your profitability at the end of the day. And if you are in a business where you need to be able to obtain loans, like especially in the real estate business, we need to be able to obtain loans when it comes to purchasing properties. Having these financial statements will make it so much easier for you to get loans when you need them. So it's truly important for the overall operation and management of your business and your finances. So the first essential financial statement that every entrepreneur needs is your profit and loss statement. And this is also sometimes called the income statement. And that's because this reflects the income from the business and the expenses from the business, which results in either a profit or a loss. So your income minus expenses will either give you a positive number for a profit or a negative number for a loss. And this financial statement is over a period of time, okay? So usually it'll be reported in a month, or it'll be a quarter or a year. So we're looking at all of the income and expenses over a period of time. So let's say for the month of May, right? May 1st to May 31st, we look at the profit and loss statement to really determine what our income and expenses look like. Now, we use the profit and loss statement to really analyze our income or our revenue and analyze our expenses, and then determine if we do have that net profit or net loss at the end of the month. So we're trying to track our performance, we're trying to track our profitability, we're looking for those areas of improvement. And this is the financial statement that usually people look at the most. Right? So this is a very important one that we want to be keeping track of to truly understand how profitable our business is. Now, the second essential financial statement that every entrepreneur needs is your balance sheet. And your balance sheet reflects your assets or what you own, your liabilities or what you owe, and then your equity. And the reason it's called the balance sheet is because this formula will always be true. Your assets minus your liabilities will always equal your equity. Or, said another way, your assets will always equal your liabilities plus your equity. Okay, so that's why it's the balance sheet. And what we're trying to determine here is really what we own in the business. How much equity do we have in the business? So assets minus liabilities equals your equity. And if it's a positive number, that's a good thing. You have more that you own in the business than you owe to others. If it's a negative number, that means that you have more liabilities. You owe more money to other people than you actually have and own yourself. Now, the balance sheet is set at a point in time. So this statement is as of a specific day, right? So whereas the profit and loss statement is over a month usually, or a period of time, May 1st to May 31st, the balance sheet is as of one day. So you would run it either as of May 31st or May, or just that one day, basically, to say this is at where we're at with everything that we own, everything that we owe. Okay. So this financial statement, is really important to get an understanding of what you own in the business. So the third financial statement that is essential for you to know for your small business is the cash flow statement. And this is my favorite statement, and it's the one that's most often overlooked. We see a lot of people running their profit and losses, fewer running their balance sheets, and then even less running their cash flow statement. But this one is so important because it combines the information from your profit and loss and your balance sheet to really give you a more holistic view of what's happening with your business, to help you truly understand your liquidity. And so just like it sounds, it helps you measure the cash flow in your business, if you have a positive cash flow or a negative cash flow. And this financial statement is also run over a period of time, similar to the profit and loss statement. So we would look at it over the course of a month, May 1st to May 31st, right? Or over the course of a year, over a period of time. So with cash flow statement, this is pulling information from the profit and loss for your operating activities. And then it's also pulling information from your balance sheet for your financing activities and your investing activities. And that's how you can really see how much cash do I really still have in this business? How liquid truly am I? Because what I see happening is you'll have entrepreneurs who are managing their businesses, basically, checking account managing their businesses. So they just look in their checking account to see, do I have enough money for the next thing that I need to get, or for the next person I need to pay, or whatever I need to do. And then they'll be surprised when they look at their profit and loss and they're like, it looks like I'm making more money. And yet I go and I look at my checking account and there's not that much there. What happened? The cash flow statement is the one that explains all of that, that is able to show you, hey, this is what's going on your profit and loss. But if you purchased a bunch of different things with a credit card, you're technically using a loan to purchase those things. Have you paid that credit card back? How has that cash moved? Have you taken out more on the credit card? So basically taking out more of a loan from them, or have you paid that credit card back? Cash goes out, right? So we're really using the cash flow statement to get that broader view of what's truly happening with our business, to understand the liquidity and the cash flow of our business. Now, again, all three of these financial statements are very important, right? Because you need the profit and loss statement to ensure that you're running a profitable business. You need the balance sheet to ensure that you're building up equity in your business or value in your business. And then you need the cash flow statement to know that you have a liquid business, that you have cash flow and are, cash flow positive, right? And have positive liquidity when it comes to your business. So all three of these financial statements are really crucial to you understanding the full financial picture of your business. Not just looking at the profit and loss statement or just looking at your balance sheet. You really need all three to truly have that holistic picture. And when you start to look at them consistently every month, things will start to improve. You'll basically have higher profitability. You'll be able to make better business decisions you'll just get a better understanding of what's really happening in your business. And if you're like, okay, but I'm not exactly sure how to set these up, no worries, I've got you covered. Just go check out my QuickBooks setup course on my website, jesslawrence.com. It's under the courses tab, and I walk you step by step through exactly how to set up your bookkeeping and how to set up each of these 3 essential financial statements for your business.